Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linden Associates. For this Wednesday, the 5th of April, 2017, just getting on past 3:20 p.m. Central Daylight Times. And this is your agriculture update. And as you can see, we had a general up day in the ags. Nothing stellar, but a nice bit of a lift to the market. That didn't hurt at all. Even the cotton was fairly stable. The sugar had a big lift early on, got up into the 1690s. And that is because India, who has been saying they would not import sugar this year, opened the doors to a duty-free import of 500,000 tons of sugar. Now, the word there is that they, because of the drought they had, that they're probably a deficit in production of 5 million tons, but this is 10%. The market got a boon from it, but then as the government talked a little bit, they made it clear this is a one-off event, and the market didn't like that, and away you went. So let's take a look at what we've got, because soybeans are going to take front and center stage as the farmers now get ready for their corn planting, and we'll see how that goes, and then they'll decide how much into the soybeans goes. But you got bean planting in parts of the country going on. 1080 down to 936.5 is the current low on the weekly charts. We're off that low right now by almost 8 cents. When you take a look at a close-only chart on a daily basis, you've gone from 1052 to 937.25, and now you're up about 7 cents off that low. This is what that looks like. So far, this is just a bounce. It didn't make a lower low and then swing up in the same day with a big reversal, anything like that. You'd really have to get on the current chart formation over 976.5 to do damage to the chart. When you look at where the moving averages are, by tomorrow, this 18-day average will be under 976.5. How I know that is a number back here in the 18-day range is going to be dropped and replaced with the settlement down here. That'll do the job, and you'll drop away like that. So we're starting to get an idea that that 18-day average of closes is going to come into play as resistance. As I've been saying for this whole break, the lower Bollinger Band is what you've been riding, and that went part and parcel as the markets had an embedded reading. When the two tie together, that's often a very bearish situation. In the soybean meal, it's the same thing. You have the embedded reading. They are starting to get a little bounce to them. That's okay. You're away from the lower Bollinger Band, but there's nothing here that says that this market's about to reverse its trend. You'd have to lose the embedded reading to just get an idea. You can get back to the 18-day average of closes here and in the soybeans. Got that? In the soybean oil, this market's plain oversold. So this market, unlike the first break of the year where oil was falling out of bed, it's now not the leader on the downside. It's the meal and the soybeans. You've got the lower highs, lower lows. But if you get over 32.10, that would negate this into an oversold condition. Wouldn't be surprised if you fight a battle back at the 18-day average of closes. In the corn, the farmers sold the markets at, I think, 369 as a hedge. I think that, and that's after that USDA report, but very clearly, the 18-day average is your support zone. You went to 361.5 today as a low. It's exactly that number. You found your footing there, so you can see how this market's just going back and forth, looking for a trend, caught between the Bollinger Band, the 100-day average on the upside. On the downside now, the 18-day average showing itself as the support factor. The wheat market is trying to establish a bit of an uptrend here. It's got momentum pointing higher. If it can get tomorrow a high over this high, the swing lines will have turned up with higher lows and higher highs over the 18-day average. The dilemma is if you try to get long, you've got very stiff resistance between the 100-day average at 434.75 and 437.25 in the upper Bollinger Band, and that Bollinger Band should slip tomorrow based on what I understand on the formula. In the sugar, you have a big outside day down today, which means until today's high is taken out, You probably have a trading top high. You went to the Bollinger Band. You went through it at one point. Actually, I take that back. You went right to it, and you bounced away from it on the close. So you went right down, found it. The pros took some money off the table, but you've got your embedded reading all over again. This market's not through, apparently, probing the downside. Coffee is oversold. It's void of trend. It's got a pattern of a higher high and a lower low. Now, it could set itself back into a downtrend should prices get under 136 and a quarter. That would give you lower highs, lower lows, under the 18-day average, but still oversold. And is the market trying to embed? Embedding means both numbers that make up the slow stochastic get under 20 and go sideways. You're not there yet. You're just oversold. I've swung gears on you to July cocoa. I looked at the volume and open interest, and there's no point in staying in May. This has just as much liquidity and open interest, so why not gain a little time? The trend is up until prices take out 2065. The resistance right back here in the 21s. You can see on the May cotton how the market had that one spike up 3 days ago and then bang, right on down, riding the lower Bollinger Band, and might even get a slow stochastic that embeds. Both numbers are under 20 today. They were both under yesterday and the day before. So guess what? You're embedded, which means on the first hard bounce, I'm looking for short sales in this particular market. As we come to the cattle market, the trend is now down. Lower highs, lower lows, under the 18-day average. Too oversold, I think, to attract a lot of new short selling. It could happen, but pretty oversold. More likely resistance shows up at the 110.40 area, and the May feeder cattle back into the downtrend and managed to close under that 18-day average, setting it all up. So the lower highs, lower lows, yeah, you're in your bear pattern. I'd look for resistance right here at 132.40. You'd have to get over 134.42 and a half to change the thinking on that. And in the hog market, a small reversal to the upside, but I think professional traders will be trying to sell the market something in there as you've got your embedded reading all set up and ready to go. So not very good action. Stock market fell apart in the final minutes of trade today. Went up from a huge gain in the Dow. You're up to 20,828, fell almost 270 points from there, as you can see, and closing sharply lower near the day's lows. That might get you some follow through. Gold, by the way, had a monster rally on that, so who knows where you're going on all those. I want to remind you about my research because, boy, I'm covering it in big detail. I was interviewed today by the Wall Street Journal. You know, I'm on TV all the time doing something somewhere. But I offer specific buy and sell recommendations galore early in the morning. What I can do in these videos that you're seeing me in right here, I can't say buy here, sell there. I can tell you what I see on the chart, and I can tell you what I think the pros might be doing because the government allows me to do that. But as for putting out, I think you should buy here, I think you should sell here, here's your stop and so on, nah. In order to do that, which I'm allowed to do, I have to have a contained subscriber base, if you will. And just putting it out to the general public, that's not contained. How do you get access to all this? With everything that I offer, it's 20-day trial to it, which is basically a business month. You're going to get my morning subscriber videos that are published typically by 9 p.m. Central Daylight Time. I record them about 8:30, and with our new equipment, I might even get them out quicker. We've put in all kinds of new equipment in our offices, much faster, we hope, but we'll find out. But that's where I can give you the meat of what I do. Then at night, I write an update, and I write an update at 11:30 in the morning. So if you like to read, you're going to get that. It looks just like this on the screen. It'll have commentary, and then it'll have specific buy here, sell there, do this, do that. Between all that, you get some ideas. What if I can offer you an idea that you were thinking of anyway? Sometimes, you know, you just need to hear something. So why not give it a try if you haven't tried it? 866-973-2077. You can go to our website and sign up for this. It'll say Ira's Market Research. Or you can click right up here if you're watching me on YouTube, and that'll bring you to the forum, and away you go. I'm Ira. You have a great day, and I will talk to you tomorrow.